Hey there. If you like big time traders who make big time money, then this, my friends, is the video for you, right? I've always been fascinated by trading contests. I think they're an excellent way to get tips. I mean, what is a trading contest for? To make as much money as possible, correct? So, modeling people who try to make a lot of money real fast is an excellent idea, right? We've talked about it many times before. And anyone in the self development field will tell you if you want superstar results, then model a superstar. Well, today we're going to break down a superstar. No doubt about it. And it's Vibha Jha. Probably pronounced that terribly, and I apologize. Why is she a superstar? Well, check it out. 2020, she finished ninth in the U.S. Investing Championships. Oh, she only made 155%. That's a monster, right? And she finished top 10. Now, that was only in the $20,000 portfolio category. I say only, that's still great. 2021, back to back, she finished second, runner up, which is phenomenal. 100% return, but now in the 1 million category, right? So she have to have a verified $1 million account. She doubled it in 2021. I mean, that's a superstar, right? 2023, she finished second again. That's her second place finish. 70% return, lower, but still unbelievable. Again, the 1 million category. And in 2024, just last year, she finished ninth. So she's been in the top 10 4 times since 2020 and had a 78% return in that $1 million category. Are we agreed? This is amazing. This is an amazing trader, right? I mean, Mark Minervini, eat your heart out. I think Mark Minervini might be the best trader on earth, but I mean, those results, I mean, Minervini has done it. He's won it, but that's a lot, right? Jha is pretty amazing. So this video is to go over how she did it. She's done other videos, and I'll link to one in the description, but she's very open how she did it. Now, why would she be so open and how she did it? Because, well, you'll see. Okay, here we go. These are all the details. And again, you can confirm these by yourself. But buckle up. There's a lot, okay? First, her strategy is a mix of CAN-SLIM individual stocks, okay? You know what CAN-SLIM are, William O'Neill, How to Make Money in Stocks, Investors Business Daily. Pretty much, if you're a trader, that's the most famous place to go. Use the CAN-SLIM method. That's an acronym for what type of individual stocks to buy. You can look that up. It's been everywhere for decades, right? For a long, long time. But what makes her unique is she also uses TQQQ, which is the leveraged ETF. And we've talked a lot about that. I'm fascinated by it. I own it, a little chunk of it. And we're going to talk more about it in the future. So that's why I was drawn to this video about her when I learned about this, and also why I'm just drawn to her in general because of this mix, okay? All right, fundamental. Now, these are only for individual stocks. So we're going to do the CAN-SLIM part, right? She wants sales growth, which is typical for CAN-SLIM, between 25% and 70%. So we want to see a company that's growing. Growing sales means usually growing. It wants an IBD, Investor Business Daily, composite rating of 95 or better, right? 95. It's not necessarily 95%, but it's in the 95th percentile, so that's why I did that, right? But in IBD, it would just say 95. And she wants institutional accumulation, which is IBD just gives a grade. A means they're acquiring, and lower was A, B, C, D, E. I think E means no one wants it, okay? A is better means accumulation. I think, are we okay? Okay, well, there's more. She mostly, though, does her stock picking and trading through technical analysis, which is something that we love here. The cup with handle pattern, the famous one, right? I think it's a little opaque. I've always found it to be hard to actually find for yourself, especially for people who aren't traders. But I get it, and I'm familiar with it, and I understand why people use it, right? But she also likes double bottoms. So if you're going to replicate her strategy, you got to know cup with handle, not easy, and double bottoms, which is a little vague. Not as vague as cup with handle, in my opinion, but there you go. So she wants those patterns. Okay. She also wants them in stage 2 or stage 2 basis. If you want to know what those are, you can read the How to Make Money in Stocks, but it's basically a stock has grown and then it's leveled off. So it shot up and then it's leveled off and then it shoots off again. That's the pattern. You want to see some relative strength, sideways for weeks and weeks and weeks, tight range, and then break out. If it does it a bunch of times or a second time, that's stage 2, stage 3, whatever. If it does it a bunch of times, then IBD lovers will say, ooh, I don't want to do that. You want the first breakout, which is, again, a little subjective, but we can do it, right? It's pretty easy. Okay, how do you size positions? You can't just go all in on every stock you find. So 10% of the portfolio on each stock. She wants 6 to 8 stock positions. That doesn't add up to 100%. I get that, but you'll see why in an upcoming slide. This is directly from what she said, though. I didn't get the math wrong, okay? But don't buy within a month of earnings. So we're looking at patterns, then we're judging the patterns. We're looking at bases. We're looking for 6 to 8. We also have to look at earnings, right? So we're already looking at a lot, but that's okay. And of course, we're going to add 2 positions because nothing wrong with pyramiding up when things are going well. So you got to have the 50-day simple moving average. She uses a daily chart to do her trading. You have to have pullbacks back to the 50. I always wondered, does that mean touching it? Does that mean below? Does it mean above? I've always been kind of wary of that, but okay, let's just say it pulls back close. Fine. And then you can't get higher than 15% in any individual position. So if you go 10% in 6, but you're adding to it, you can see that will get you up to 100%, assuming she doesn't do her other TQQQ part. Okay? So with me? Yeah, it's not my strategy. All right, let's talk about stop losses. She does not believe in rigid stop losses. IBD says stop out 8%. Right? No, she's not going to do that. She does technical stops. The chart has to tell her when to get out. So you stop out after a cross below the 50-day moving average. Okay, we can put an alert on that, I guess. Not too hard. Or a gap down of over 20%. Ooh, that's a big one, right? That would be scary. That would be pretty easy to want to exit and get out on that. Also exit on a change in the underlying business. I love when people say that, and I'd like to know what exactly that means. The underlying business has changed. Ask 10 people, how many different interpretations of that are you going to get? She says a strategy or leadership change. Well, leadership is easy. New CEO, get out. Strategy change, I don't know. Has Pepsi changed? It's gone more to snacks than it did in Pepsi's. Does that mean Pepsi's an exit? Again, it's a little bit vague, but fine. Or she gets out on a change of personal conviction. Oh, boy. I don't know what that means, right? I guess I feel bad about it. Well, I could feel bad about it because the stock dropped, or I could feel bad about it because tariff news came out. That's a tough one for me, and your conviction won't be the same as hers, but if you feel bad about it, get out. I think that's fair. Or if we're in an overall correction, well, what is that? Is that 10% from the high? Is that 20% from the high? You have to make up your own. Is it a break below the 50 moving average? You have to have your own distribution days. IBD loves distribution days, which means what? 2%-ish or more on high volume, which is greater than the average of the past 50 days, right? Distribution days, I think, are also not vague, but hard to follow. But once you determine it's a correction, which again, there are more rules you have to follow and make for yourself, you sell then the weakest performers first. So if you have 8 stocks and 4 of them are doing poorly, start selling off the bad ones and leave the good ones. Love that. Makes sense, right? Plus, she likes to do quarterly reviews. Okay, this stock is doing X, and are there any on my watch list that could be doing better? So we're doing all this work, and we also get to do more work for the reviews, but that's okay. Now, here's the special twist, which brought me to the strategy in the beginning. She uses TQQQ. Okay, but when does she use it? All right, I'll tell you. When no stocks are meeting the screen. So she has a screen, right? Sales and relative strength and overall composite rating and all that stuff. Well, what if nothing's coming up? If we're going into a recession, for example, maybe nothing would come up. Well, then she goes right to TQQQ. That's where she switches over. Okay, so she goes on alert when no stocks are meeting the screen. Then, as a side note, she uses it extensively in IRA accounts. These aren't really related. They're two separate things. Just an add-on, okay? Because those aren't taxable, so TQQ is great. You don't have to, if you buy and sell it, you won't get taxed on it. Plus, it has a chance to go up a lot, right? Then another separate reason is she uses TQQ as a market entry tool. Okay, so nothing's coming up on the screen. Market's been down. When the market turns around, because now it's day 4 or day 5, and I've always loved that. Is it day 4 or is it day 5, right? Which is it? You can't just say, if a rally does A or B, I mean, if we're going to follow rules, we need one of those. You can't be always day 4 and then do day 5. I mean, you can, but don't love that. But when we get day 4 or 5 of a rally, okay, big green bars up, I guess, then enter TQQQ, it's time, and go for 20%. Just 20%. Yay. I mean, that's great. And then meanwhile, we're looking for new stocks, We're trying to make 20. Of course, we have our stop outs. We're trying to find new stocks. And if we find those, then we start getting out. No, we're not done. There's more. Okay. Overall, she's done extensive research and finds that TQQQ gives 20 to 25% moves several times a year. I think you'll find that's true. That's why she's interested. So we're going to enter when it gets close to a 50-day or a 21-day moving average after a 15% pullback. So that's another rule on top of this rule, right, as a market entry tool. But let's say it's not a market entry tool. Let's say we've had a 15% pullback in the market, right, or TQQ. Let's say the market, okay? And that's believe she said market. Buy when it's making higher highs. So we've got a pullback, and then it starts making higher highs, whether in the market or TQQQ, when it starts making high. Again, that's a little bit vague. Now, sizing, though, moving on. Sizing is 25% of the portfolio. If we're just doing TQQQ, it can go as high as 50. In the IRAs, she's doing 90%. She's very aggressive in the IRAs, okay? She will also maintain a 25% core position if the market is good. So we had 6 stocks at 10% each, 7 maybe, and now we have 25% in good markets. Maybe she keeps 25% in TQQQ. It's not entirely clear, okay? Off of these pullbacks, when do we get in and what sizing to use? But here are the rules. And then you capitalize on moves of 20% or higher. So let's say TQQQ, we'll just say it's TQQQ. Pulls back 15%, starts making higher highs, 25% of the portfolio, cut it when it gets 20% higher. I think that's fair methodology, okay? And she has then a comprehensive checklist for selling. There's more. You ready? Here is the TQQQ checklist for selling. You don't sell it all at once. You sell in 10% chunks as these signals are triggered. Gone over all those triggers. Also, if it's at a 52-week high, sell. Also, what if you have declining volume? You make new highs, but the volume is down. That's kind of a dangerous signal, right? Sell. If you have 4 to 5, well, which is it? 4 to 5. 4 to 5 distribution days, sell. If you have a violation of the 10-day moving average, so you have a 10-day moving average on your chart, it goes below, sell. 3 consecutive down days, sell. It's a lot. I mean, it's a lot of rules. Or price is rejected at 3 times, right? So it goes to resistance, pulls back. Goes to resistance, right? Goes to $100, pulls back. Goes to resistance 3 times if it's rejected and does not make a new high, then we get out. That's a lot of counting. Or if we get a poor close and rising volume, big volume and a big red bar, get out. Or when the bull versus bears index rises above 50%, okay? It's too euphoric, in other words, right? Everybody's buying, selling to strength, okay? Oh, not done. When, though, should we use stocks versus TQQQ, right? To summarize, well, we use individual stocks using CAN SLIM and all that stuff in a strong market, yay, with minimal distribution days. Again, you have to define that and then count them and then decide what minimal means. Or you keep it in stocks when multiple stocks, when everything's firing off on your screen and popping up, then yes, it's time. Stocks are hot. Stay in stocks. But you also need clear setups with proper base formation. So you got to count the bases. You got to judge the bases. You got to look at the patterns, the double bottom or the cup with handle, and you got to determine that's okay. Then you got to get the proper base to also be okay, plus these other two. Got it? However, we use TQQQ when individual setups are scarce, right? We talked about that. When we're not getting anything on our screen, hop, we jump to TQQQ. Or when the market is emerging from a correction, but you don't see any proper bases in your individual stocks. If you don't see a good setup, then okay, we'll just go TQQQ and we'll enter in chunks and blah, 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 right? So that's all you have to do, right? Is find the stocks, judge the stocks, then watch the stocks, then keep that checklist of 10 things always in your mind. I mean, it's a lot, right? I mean, I'm not against doing hard work. As a coach, work is the key, right? Hard work leads to something. And maybe that's the price you pay. Mark Minervini would tell you that's the price you pay. If you want these returns, you have to pay the price. And remember, here are the returns, right? So yes, that is a lot. Many slides of, I think, well, I don't want to say overwhelming, but a lot of information. But look what you get, right? Right? Now, 20, 21, 23, 20. Is there a year missing? Anyway, we'll talk about that later. But if you want those returns, you got to do the work, right? Tough noogies. Okay? But I was curious. Could we do anything that's easier? I mean, how in the world would you go to your parents, let's say, who are financially illiterate but have some money saved up and say, sit down and go over this strategy, go over this checklist with them, right? Right. Go over those checklists, right? Now, what would you do if you had a 14-year-old child and you want to get them involved in the market? Well, how's a 14-year-old child going to check cup with handle, basis, distribution days, declining, right? It is a tough sell. Dare I say impossible sell? How do you teach this to somebody and get those returns? I mean, you and I can do it, right? Because we've studied this for years. It's just tough. So I wanted to see, could we come close? What could we do as regular people to get returns like that? Is it even possible? So I dug deep. Here's what I came up with for you. In 2021, my strategy did 110%. Pretty good. Not as good as her. She did 45% better. 2021, my strategy did 82.98. Still great, but not as good as her. So I'm losing, right? I guess work pays off. In 2023, though, my strategy made 198%. Her strategy did not. Remember, she was 70. So I killed her by that. I killed her that year. So now, if you add up all the wins, I'm up 128%. Well, at least in this particular year, sorry, I'm up 128. And in 2024, I lost again. I only made 58 in my special new strategy, okay? So I lost most of the years. My lazy, stupid person strategy lost most of the year. Still great numbers, of course, but I did win in 2023, okay? If you want to see what that looks like, here's 2020. My strategy ended with 21. Her strategy, or just the S&P index fund, 11. This is not her. This is versus SPY. So my strategy killed SPY. 2021, my strategy killed SPY by a large margin. 2023, skipping a year. 29 versus 12, killed it. And my strategy in 2024 beat the market badly again. So I am beating the market, right? But did I beat the trading superstar? Well, going back to this, I was down 45 that year. I was down 17, so I'm down around 60, but I'm plus 128, and now I'm down. If you add all those up, my strategy beat her by 45%. All right, if you add them all up. Feel free to do the math and correct me, okay? So 4 years. I didn't win all of them, but my strategy did have a great year in 2023. Now, if you just go straight and don't skip any years, well, actually, let's do 2025 first. Nope, we'll do 2025 first because we only showed through 2024. In 2025, my strategy actually still doing great. It's killing the market again. So I don't know how her strategy is doing in 2025, but so I'm still going strong. Okay. All right, your time. It's going to take a little less time to go over my strategy than it did the other strategy. You ready? Here we go. TQQQ, 100% buy and hold. That's it. Right? I'm sorry if that makes you angry. I'm sorry if that triggers you. But you could click a button in 2020, January, and click another button in December 31st, and then say, oh, how'd I do? And then do that again. Or you can just click a button once and just go. So that's pretty good, right? As far as work goes, right? It isn't any work. Now, remember what I said before, her results skipped a year. And so thus did mine. Let's say we didn't skip a year. Let's say we traded straight from 2020 to 2025 as I make this video. Well, my strategy ends up at 49,000 and the SPY ends up at 22. That is a 398% return doing nothing. So, one of the best traders in the world, and you could make an argument that she is the best, right? She destroyed the market, except for 2022, which we don't know. But she destroyed the market using years of work and dozens, if not hundreds of hours of constant vigilance, right? All methodologies that make sense, but it's a lot. And TQQ alone beat her results by really 45% is a decent sized margin, right? Remember what Charlie Munger once said. Most investors can't stand simplicity because they need it to be complex, to be profound. Well, it seems profound, those several slides of many, many, many rules. So people probably won't like that, right? But simplicity made more money. So the question that's been bothering me a while, I've been sharing it in this channel. Some people like it. I think other people do not. But why am I trading? Why am I doing checklists? Why am I looking for cup with hand? Why am I doing that if something easier makes more money and does it better? Why am I following all of these rules when it doesn't make me more money? It's a tough one, right? That's why I've had really been doing a lot of research on how to make it easier, because it's a tough question. Of course, if you've made it this far, there is the small matter of 2022, which we've kind of alluded to when considering TQQQ, and it is a nightmare. Okay, but we'll talk about that, why it's a nightmare, and possibly something you can do about it in a future video, which I'd be excited to talk about. Now, but keep in mind, besides 2022's nightmare, you saw the results from 2020 to 2025. So keep that in mind too. All right. I'm tracking this, of course. I own TQQ, or TQQQ, so I'm obviously on that constantly. But I have many other portfolios. I have an income program if you'd like to make income rather than worry about growth, high and lows or whatever. And there'll be all sorts of links in the description. That's all for this week. Bye for now.